Welcome everyone, and thank you for joining us for our Alkane Resources Investor Briefing webinar. My name is Nicola Gazzatti of Investor Relations Consultancy Corporate Storytime. Joining me today is Alkane's Managing Director Nic Earner, following the release of the company plans for the next 5 years of operation at its Tomingley Gold Operations in Central West New South Wales. These plans show Tomingley increasing production above 100,000 ounces of gold per annum, with strong resultant cash flow. Nic will run through an investor presentation, which we will then follow by a Q&A session. So without any further ado, I'm pleased to hand over to Nic. Thanks, Nic.
Thanks, Nicola, and good morning, everybody. So hopefully I'll be able to answer most of the questions that you have as we go through this presentation. There's a fair bit of complexity to what we're trying to do, and yet I hope you will find it's also very, very simple. So let's get into it. The things I'm going to run through today to start with is I'm going to talk through the physicals and where they come from by showing you some of the mine plans that we have. Then I will go through a summary of the capital, both what we've spent and what we're continuing to spend going forward. We'll look at the timing of that capital and the timing of the program. I'll dive into a couple of individual items, and then we'll look at what our forward capital program is, and then also potential future production, because obviously we have a life of mine that extends well beyond the 5 years. So first, on the physicals. So this year we've had to reduce our guidance to 55 to 58,000 ounces, which forms FY24 number. FY25 is predominantly fed from Roswell underground ore, which is higher grade than what we've been feeding out of particularly the Coloma underground ore bodies. And that is why you see us move to being in that 70 to 80,000 ounce ranges. I'll come to AISC in a minute. In FY26, we start to see the very first open cut ore come in. And as well as that, the plant should have been expanded by the end of calendar 25, so halfway through FY26, which is why the ounces increase there. And then with the open cut and underground both online in the years following, and milling at 1.5 million tonnes per annum, it's where we hit our straps above 100,000 ounces. Reasonably simple, and I'll run through those plans. One of the obvious things for people to wonder is, why is the AISC in FY25 $2,400, $2,600? This is because of the decline development that's occurring in Roswell. Under the global standard for the reporting of all-in sustaining cost, you include capital development for declines. Whether others do or not is a matter for debate. However, we do. And so that is why it is $2,400, $2,600. Of course, that decline development is utilised in the following years, and it is effectively an asset for the Roswell underground ore body, but that is why the cost is up. For those that say, oh, well, you shouldn't have included it, doesn't really matter. The cash is going out the door on that development. This is the Roswell underground mine. We're looking west. The numbers against a relative datum that we use for internal meterage. And so the basic thing is that the gap between the numbers, there's 100 meters vertical against that mark on the side. You can see our planned stoping on one of the lenses. This is on the easternmost lens of the ore body. There's another lens in behind that. And you can see the different development that we have. This is covering much of the next 5 years. And you can also see drilling that we've incurred and are doing underground at present, with a lot of intercepts outside of this plan, which of course is what we will incorporate as we do going forward. You can see my laser pointer there. This is the region that we're mining over the next 18 months, and then we expand above and below in the years following. This resource is open at depth, open here to the north. There's another lens in behind, and the San Antonio pits are off the screen to the left. You can see, of course, how closely packed the stopes are. This is because we are paste filling underground, and we'll talk obviously about the paste plan as we move forward. So this mine, at the moment, we have this development here. These are connected, and we've been stoping in this level just here at present. This picture that you see is if we were standing at Tomingley on the eastern side of the highway, on top of floating in the air above the Coloma pit and looking down the Newell Highway, you can see on our right over here, the Newell Highway diversion will track off in this direction here. And then through here is the Newell Highway. And then this is the work that the open cut team has been doing in preparation. There's some culverts coming in here. But the purpose of what I'm actually going to do now is show you the sequence of the San Antonio pits, which are the only ones that fall within the next 5 years. Here's the two pits. Up here is the Coloma pits. We build an amenity bund. We mine the central pit. The overburden goes into Coloma to backfill that as part of the approval agreement with the New South Wales State Government. Then we mine the southern pit and we start to build the waste rock emplacement that's here. Going on in sequence, there is cutback here, Roswell pit, but in the next 5 years, this is the open cut mining sequence. So if we look at the capital, what I've tried to articulate in this section is to say, from today, how much money is going to go out the door. We'll come to what money we've spent and all the differences and all that kind of stuff. But the important thing to note is we have pretty much $130 million of capital left to go out the door, either on items that are finishing or items that are now going to commence. When we look at completion, this is in terms of physical completion. So how complete is the actual work as distinct from the capital? We'll dive into it. But on a very, very high level, the thing to understand is that the Newell Highway diversion, which is yet to commence, and the process plant throughput expansion, which is yet to commence, both have doubled in price since we first did our work through 2021. This is very consistent with much of the industry in Australia. In fact, quite a few industries, if you look at other construction industries within Australia. And that's the situation that we found on this. And so if we look at, we had $90 million. We've added 2 scope items, which I'll talk through, this process plant recovery and the paste plant. They combine roughly $70 million that we have or will spend. And if you look at the additions in cost, which here we have $25 million and $15 million, totaling $40 million. So effectively, this 90 has become 130. It's just a coincidence that it matches this number. And we also have an additional $70 million of scope items that we have added across the last 3 years. I'll get into those in more detail and obviously answer questions if people have it. Here's the timing of all the different stuff, all the different moving parts that we have at the moment. The paste plant, I have pictures coming up, is under construction. It will complete construction, we expect, in October and be commissioned in November. And we expect to be having paste going underground and have it commissioned before the end of the year. The flotation and regrind circuit, we expect to finish construction in October, late September or October, and then commission it. Again, we expect commissioning to complete at the end of the year. And the commissioning of those two is intertwined in that the tailings from the processing plant goes to the paste plant. And so therefore, those are intertwined in their commissioning. The site power work, we've had to upgrade that power in order to accommodate many of the things that we've discussed. That new yard is largely built and we expect to bring that online very shortly. The open cut infrastructure, and by this we mean the road that I showed you, the haul road, buildings, all the kind of things that you'd imagine when you're setting up a new mine. And it also includes potentially the water pipeline, which I'll refer to soon. We expect to build that across calendar 2025, all with the aim of starting open cut mining at the start of 2026. The Newell Highway, we'll go into this more, but we're in closing out the tenders at the moment. We expect to have completed that road by the end of 2025, together with the Kylite road that intersects it. The process plant throughput we expect to be constructing through 2025 so that we're capable of running at 1.5 million tonnes per annum in 2026. And the residue storage facility 2 is complete. So let's dive into the paste plant. Let's have a look at this picture. This is the Newell Highway. We're looking from the northeast. That's the southwest over here. That's the Newell Highway. This paste plant is being constructed. You can see here first to describe it. Here's a cement silo, belt filter, cyclone pack for separating out from the tailings. There'll be a pipeline coming down here along this road that's been developed. This is a wet paste plant, meaning it uses tailings from the processing plant and then sends back water and fine tailings. When we very first envisaged the project, we imagined that we would use dry tailings, so that we would mine old tailings, repulp it, and put it in a batch plant that we would hire. It became pretty obvious as we dove into the project more that it would be a lower operating cost and indeed much simpler for a range of reasons to build this facility. We're obviously always going to do paste to increase ore recovery so that we can do side-to-side stoping like I detailed in the Roswell plan. The total project cost here is $30 million. We've spent roughly 22 of that because that included all the long lead items and pre-ordering of equipment. We've got $8 million left to spend. You can see from the picture we're halfway through building it, and I'll talk through the commissioning. The flotation and regrind circuit. This is inserted before the existing mill, so I'll explain that a little. But to detail this, when we started drilling out the reserve at Roswell, we did a lot of metallurgical testing, and it became apparent to us that there was of the order of 6%, perhaps even more, recovery that could be gained in addition to what we'd originally planned by fine grinding a portion of the ore body to increase liberation and therefore its capacity to be attacked by the cyanide. So we've constructed this plant in order to liberate that. You can, doing the rough economics in your head, you can see that there's very rapid paybacks of this if there's a 6% ore recovery. So the way this circuit works is that from crushing, we grind and then we go through flotation, and then from that point we take the flotation concentrate and we regrind it, and we regrind from typically our ore is ground to around 105 micron at present. The flotation concentrate will be reground to roughly 35 micron, increase the liberation and therefore the recovery. This project is going to cost $40 million by the time we're finished. We've spent roughly half of that. It's roughly half complete as well. You can see that the flotation cells are here, pipe racking, isomill, thickener, transformer going in here. So this is halfway through. The purpose of this is to increase ore recovery and therefore economics. It's not related to the 1.5 million tonne per annum throughput, which will go up here, a new mill. However, this is sized, of course, ready to run at 1.5 million tonnes per annum if needed. This is residue storage facility 2. This is the plant up here. Here's the existing storage facility 1. This is one of the other cells that's in operation. This photo is a week or two old. It's now, it is complete. We're just doing the final battering. The pipeline's going in at present, and we'll be depositing tailings into this. This total project has cost us in the order of $12 million plus our internal expenses, against our original thinking several years ago that it would be $10 million. However, we did commence this 2 years ago. So to note here, we now have tailings capacity with this dam, storage facility 2, out over three years and potentially even 4, because we also are depositing tailings underground, of course, with paste fill. Then we also already have approval for another lift to go onto here, and then several lifts can also then go on beyond that. So we're very well positioned. Off the very north of that, so as you drive into the site on the right, this is our existing yard, and this is the yard that we're just finishing up to go through to 15 MVA, and these are the new generator sets that we are putting in, 3 megawatts of that. That's just backup generation in terms of not to continue running the plant, but to run the essential services while we're doing it. So obviously with the new grinding that we're putting in, the increase in throughput, the new underground equipment, the new vent fans and the paste plant, we need to increase our power supply to site. And this is what we're doing. That this project's nearly complete, and we have a high voltage shutdown in July that we'll be commissioning this at that time. This pipeline and vehicle corridor is currently being constructed by Tomingley's open cut team. So we have a team that did the cutback here at Coloma, who are going to be then doing the work down at San Antonio when that comes online. At the moment, amongst a range of other things, they have been laying this pipeline and vehicle corridor. This tailings pipeline will run along here, light vehicles run along here, and this will be upgraded to become the haul road. There is substantial culvert work amongst the drainage structures that go on. I have a picture of that coming up. These culverts here, and there's another laydown yard, we already have the culverts delivered for the Newell Highway. And so as well as this haul road, or what will become the haul road. So this work is ongoing, and it will reach the paste plant within the next 2 to 3 weeks. Just to show you the picture, because this gives you an idea of the works. This is a very structure that will be replicated on the Newell Highway many more times. Basic culvert structure you might drive over the highway, but we have many, many culverts going into all of these places. These are box culverts. And so you can see that we'll be running down this road and then around, and the Newell Highway will be over here in the distance. And this is where the paste plant is and where the Northern San Antonio pits is. So the forward capital program, and this is to look at some of what's occurred and some of what is still to come. If we just work down through the list, environmental application fees, biodiversity offsetting, we've spent $4 million today, and we have another $3 million left to spend. So the way that we address our biodiversity is both to plant new trees and then section off areas for biodiversity offsetting, or pay into the government fund, which has a prescribed amount required for the different types of offsets that you need for different types of species and areas. And in our case, we have predominantly white box woodland and fuzzy box woodland. And so that's the remainder of that. We've already spent, like I said, a fair amount of money on that, as well as the environmental assessments and everything required to get the approvals in the first place. Infrastructure, power, water. The power is pretty much complete, right? But we have $12 million left to spend in this space. That includes the haul road, so changing what I just described to a haul road and adding amenity bund beside it. And if we need it, it includes the cost of the water pipeline. The reason I say if we need it is we have nearly a gigalitres worth of water stored on site in Wyoming 3 that has come from rainfall and the harvesting of that rainfall. And so it's not certain that we need that. We have the licenses, we have the corridor, but we don't yet know the way the water balance will come. A lot of it depends on the weather, but we're allocated money to build the pipeline if needed. The Newell Highway diversion, as I said, the cost has doubled since the original estimate. We expect to award this before the end of July. We're in the final discussions with our preferred tenderers. However, the first stage of this is like any project S-curve. It starts very slow and then ramps up through next year. The first stage of this is that even though the project is fully approved by the government, and we have a works access deed, and we have a finalised 100% design approved, and we have all the other things that you need to do roadworks, the next stage is that the government has to approve the contractor's construction and environmental management plan. So whoever we select will spend some months working through that process. It could take up to 6 months, and we've assumed that in our schedule for next year. So that's a essential piece of work from respect for timing, but not a large piece of work with respect to funding. The process plant upgrade of 1.5 million tonnes per annum, we expect that to cost $30 million now from all the pricings that we've had come in. That's doubled since our original estimate in 2021. We have done preliminary engineering, and we have done, we've done a lot of engineering, but we're taking that to the next level of detail engineering for start to finalise tenders and purchase long lead items. That commences in July. Again, that's not a remarkably expensive piece of work, but that's needed in order to remain on that timeline, particularly to determine what we need to order for long leads. And then I think I've created some confusion because I've got quite a few questions that people rang me up yesterday about in the final investment decision. What I was really trying to say with this is, when's the major expense commitments? When's this become irreversible? This, well, not irreversible, but you know, I get what I'm saying. Irreversible is in Q1 next year. So I've described the things that occur in the highway diversion and the process plant upgrade, but we don't really start laying out major money on these two things, which, you know, combined for $80 million, until late in Q1 next year. So obviously, as a board, we'll review, okay, is everything on track? Is this going to work? So what are the major things that could derail that? We have hedging, we have puts that we've bought. So it would take an absolute devastation in the forward curve for gold for us to not want to proceed beyond the time period that we have for protection on that, or some massive disruption in the debt markets. We're assuming that this is going ahead. What I'm saying is, of course, we will review that early in Q1 to make certain that all the assumptions that we've made around access to debt and future gold price still remain valid. But for all intents and purposes, we'll just be rolling on. Production beyond the current plan. I certainly want people to understand that I've detailed 5 years because this is what we've put out in the schedule. Our project has approval to 2032, and we can extend beyond that. We've open cut reserves that exist at San Antonio and Roswell that go beyond the current 5-year plan. We've got resources that are open at depth in a wide range of places. We've got cutbacks and pit designs for San Antonio South and Roswell. What we don't have is a clear picture of where all that's going to land in 5 years, and so we'll continue to, you know, work out and look piece by piece as different things are drilled out and developed. And so absolutely our mine goes beyond 5 years, but I can't tell you the sequence yet of which bit of underground versus which bit of open cut is the most economic. However, we of course will have spent the capital, and we will have plant process capable of processing at high run rate. So we're in very good position to continue to extend the mine life without substantial capital development. And of course, you know, looking much more broadly, our regional exploration continues, which helps us look, you know, well beyond 2032 for all sources beyond that. So hopefully that gives you a bit of a picture of what it is. I'm certain there'll be questions that'll help give clarity as to what there is. I will stop screen sharing now so that I can answer some questions, and I will of course start screen sharing if I need to.
Thanks so much, Nick, and thank you for the investment update. We'll move on to our Q&A session. What key risks remain to move New Highway, and how much additional debt funding will be required to deliver on capital requirements?
Yep, certainly. So addressing those two parts. The key risks in the New Highway are pretty much not many left, in that the way that things work is that you have you need an approved contractor who's allowed to work on Transport for New South Wales road network, and you need an agreed design, and you need an agreed what they call a works access deed. We have all of those things, right? And so we've purchased the culverts, right? And so things that occur now is the actual physicality of building the road. And so the major thing that could impact that, I think, would be very, very bad wet weather beyond that which has been envisaged in the schedules occurring through 2025, because that would simply delay the program. So that's the major thing there. But everything else is pretty much set now. In terms of contracts, the way the contracts are structured is, you know, we look forward for fixed pricing with rise and fall for things like fuel and bitumen costs. So all of that's pretty known as well, right? In terms of debt position, so if you look at the cash flow coming into the business, you look at our current debt of $60 million, and you look at what we need to do, we expect that our debt will peak at about $110 million at the peak of spending in the middle of next year.
Thanks, Nick. Our next question, and it's quite an extensive one. You indicate that a final decision on relocating Newell Highway to be made early 2025, and you will make a recommendation to award the winner of the tender for this work by the end of July, which is about 5 to 6 weeks from now. Can you add more colour around these 2 points, please? And in addition, can the winner of the tender guarantee the price for the work for a period of around 8 months until Alkane makes the final decision? And why would next stage of engineering commence early after end of July if final decision is not being made for another 7 months?
Yeah, I think I may well have already addressed some of that throughout the presentation. However, if I look at it, so the way that the tenders are structured as a negotiation, includes aspects of pricing and locking that in and rise and falls. So that sort of covers that question. That's just part of the contract negotiation process with someone. In terms of why we commence work now, well, that's incredibly standard in that if you look to keep anything going on a continuum, then you need to do work in the present ready for execution in the future. And so that is why we do, engineering, and I talked about the approvals process for government. All of those things continue. And I also alluded to, the final investment decision. There's not much that will derail that for us at all. And so we operate on the assumption that, of course, that's going to occur. And so that's why we do the work now, because otherwise we've simply add a time gap and delay into what it is. Did I answer all the elements of that question? That was multi-part. Sorry.
I think you did, Nick.
Okay.
Our next question, the drill section from Roswell shows a number of intercepts outside the known resource. Is Alkane planning to release any exploration results from those areas to give investors an idea of future resource growth?
Oh no, not really. That's grade control. We'll just incorporate that into our, we incorporate that into any resource or reserve upgrades. If we step right out and we think that something's going to, really shift the dial in a material fashion, then we will. Otherwise, we'll just have periodic resource growth updates that occur. People remember that they're looking at, in that picture, they're looking at intercepts outside the mine plan, like outside the design stopes. That's different to it being outside the resource shell. So the resource shell is not shown in that picture. It's larger than that. And so a lot of those drill are grade control drill results within the inferred resource, right? And so, yeah, what we're looking there is conversion, right, of indicated and inferred resources into potential mine shapes, as distinct from new discoveries. Of course, if there's new material discoveries, then they'll be released to market. Yeah.
Thank you, Nick. Our next question refers to Bodecaza. How is the scoping study for Bodecaza progressing, and have you had any significant interest from potential JV partners?
So Bodecaza, so that's going well. I mean, some of this 5-year plan stuff has sort of derailed our compilation of that. So a couple of weeks ago, we worked on the underground plan, which is now being incorporated. We're wrapping up all the physicals, checking things like, TCRCs and shipping costs and stuff. So I'm very, very hopeful that we'll have that out very shortly. And we've been drafting a whole heap of that stuff in background. So, I expect that scoping study out very soon. I really hope to have that out already this week as well. And obviously we'll have another webinar at the time. In terms of joint venture partners, we have approached some, particularly looked at, international trading houses and other people that look at that. But most people are like, well, let's get that scoping study out there, and then we can look at it and make an evaluation ourselves. So we need to get that scoping study document out so that we can then go and look at who's potentially interested from a joint venture. So no, we're not running a formal process. Yes, we will go and approach people and/or, receive approaches, but it'll be post the scoping study going out.
Thank you, Nick. Our next question, Do you need a capital raise to increase the size of the Tomingley Gold project? And have you thought about spinning Boda out into its own ASX exploration company?
Yeah, no, so the answer to the first question is no, we don't. Obviously, we're looking to increase the debt position rather than doing a capital raise. And, we think that having debt rather than a capital raise is, more sensible potential growth in value for shareholders. And I'm sorry, what was the second part of the question, Nicola?
And have you thought about spinning Boda out on its own?
Yeah. I mean, that is a reasonable thing that we would consider down the track. But for a successful demerger like like ASM was, you need strong investor interest in that, right? You need the value to not be recognised in your current share price, and you need a pretty excited market ready to receive this as a product. I don't think that we have those three things aligning yet. Of course, having done that and being familiar with how to do that, we would consider it. But we would really need to see that creates value for shareholders that's not being recognised in the share price, and it's just too soon for that to be considered as something at present. But of course, we're open to it.
Okay, our next question, which does relate to the 5-year plan, Nick, can you provide insights into the factors driving the increase in all sustaining costs compared to the 2021 plan? What specific areas have seen the most significant cost escalations?
Yeah. I mean, we won't be the we won't be the only people that have similar things. So I've already talked about sort of the decline development, but let's talk about originally, back in 2020, 2021, we anticipated that we'd be sort of in the $1,400, $1,500 Aussie range, and we now see ourselves in $500 more than that, right? So that's a 1/3 increase in cost, right? Because we're going from 1,500 to 2,000, but maths wise. So what's occurred since 2021? So a range of things have gone up in price. Fuel has risen and fallen, but it's up in price since that point in time, but it's not crazily up in price. The electricity price has nearly doubled in that period of time that we use for processing. The cost of steel has risen by 30 to 35%. Labour has gone up, like most of us have seen in salary increases, only sort of 10 to 15% in that across those number of years. International reagents, depending what they are, and explosives have risen by between 30 and 40% in the cost of those. They're the major items, right? So reagents, steel consumables, electricity has risen by, in the last, we're talking now 3 to 4 years, by over 30%, and our costs have risen accordingly.
Our next two questions do relate to FID. Which components of the upcoming capital program are subject to the final investment decision in early 2025? Could you elaborate on the key factors that will determine the FID?
Yeah, I think I've answered this already, but to recap, it's the process plant upgrade and the Newell Highway, and what would need to derail our current plan, which is to simply execute it, would be significant changes in the future gold price or significant changes in the debt markets.
Thank you, Nick. And our next question in relation to FID. In regard to FID, what could be a potential plan B? Could San Antonio ore body be mined from underground without needing to divert the Newell Highway? What is the FID decision hinging on, being the most forward production is now covered by 3,000 strike puts?
Yes, I think I've answered the latter part of that question already, but the first part of the question is, and obviously we evaluate all of these things. So the ore bodies can be accessed from underground, Roswell and potentially San Antonio. We've done a lot more work in Roswell and San Antonio from underground grade control drilling perspective. And we do have mine extensions underneath the Calomas as well that bringing additional tonnage. However, there is an RL that there is a depth below ground that then requires the moving of the Newell Highway as well, right? If we wish to mine closer to the surface. So remember that Roswell ore body starts sort of approximately 50 meters below surface. The San Antonio's vary between sort of 25 and 35 meters below surface. So it would not be possible to come all the way up to surface without moving the Newell Highway. That requires a lot of structural work and assessment as well. And then it would require a change in approvals as well. So plan B would be continue from underground, but it would be pushing at depth, particularly under Coloma and Roswell and San Antonio, and it would be leaving resources for a later date in an open cut environment. And you can see that that would see us. Let's say we did execute Plan B. Well, that would see us running at this 70 to 80,000 ounce run rate for many years.
Thank you, Nic. Our next question. In your view, does Alkane receive reasonable broker support? Which brokers does Alkane interact with?
Yeah, so there's two different things. So we receive a lot of broker research, Bell Potter, Euros, Hartley's, Moelis Australia, Petra Capital, and one other that'll come to me in a moment. Ord Minnett, sorry, is the next one. So yeah, we get reasonable research. In terms of broker support, as in, do we have institutional desks or retail desks really, promoting and selling stock? Not remarkably, if we look at our share registry and we look at, where's the buying and selling come from, the vast majority of buying and selling is going through CommSec and other trading desks like that, as distinct from through brokers. But certainly the analysts understand and publish good coverage on the stock.
Thank you, Nic. Our next question relates to Roswell. What kind of guidance can you provide on underground mining costs on a $1 per tonne basis as it pertains to Roswell?
I don't have that at the top of my head, but my recollection is we're in and around depends what you include in time, but all in including development, we're at around the $85 a tonne mark.
Okay, thank you, Nic.
Sorry, of all then delivered. Sorry, and just to circle back to the brokerage question. Sorry, Nicola. One of the questions that I get asked, a fair bit is, around broker support, and therefore, why is the share price low? And I think it's worth discussing. So in terms of discussion with brokers and institutional investors, other retail investors, there's a couple of main thematics that occur. Number one is just the really simple thematic that we've been spending money, and you can hear what we've been spending it on, when some other companies have been increasing their cash balances. And so some analysis that it has been as simple as, well, these people are saving money and you're not, so therefore we won't purchase you. So that's one reason, and I don't know that there's been a strong push to show that turnaround story. But it does mean that if you look at our plans, as we start to generate cash, we can expect that people will certainly be forced to change their perception on that. Number two reason is that a lot of buzz and a lot of broker attention is around consolidation, regional consolidation, and particularly in WA. And as a single mine, without that much consolidation opportunity for it, it doesn't attract that same attention and excitement. And it certainly doesn't attract people speculating that there's short-term turnaround. Yeah, they're two factors that I think hopefully delivering on solid cash flow will show. And the third factor is, just people saying, okay, you're going to spend a lot of money on Boda. I mean, I've said it many times before. We've spent money on that, and our exploration program for the next few years is sort of $5 to $6 million. So that's not where our forward cash is going. Our forward cash is going in this work at Tomingley.
Thank you, Nic. Our next question does relate to Tomingley. When does the current underground mining at Tomingley end?
So it depends on what basis you're looking at. So the current reserves would see underground mining finishing in Tomingley in 2029. Right. So if we didn't discover if we converted no more of the resource to reserve, if just nothing happened at all and we only mined what it was and we left gold in the walls and all that stuff. So of course, we don't expect that will occur, because we, are looking at resources that we're looking to convert into reserves and extend the mine life. But yeah, if we did nothing else at all, that's when it would be.
Thank you, Nic. We have two remaining questions. Why does Alkane maintain the investment in Calidus, which has halved in value since January?
Oh, okay. Yeah, so that's a position we've held for quite a number of years, risen and fallen. And so our investment in that sees us at 6.7% of the register. As you can understand, with a share price that's under pressure like theirs, there's not, we need to sell to another institutional seller. So there's not a lot of, potential purchases for that without us. And if we were to sell a market, we just destroy the market, right? So we don't count the value of Calidus or selling Calidus and therefore cashing in any of our forward cash projections that I've talked about today. We think that there's better value for people for us to, hold that stock and see them re-rate as they work through stuff, which they are doing. I think the time as they start to deliver cash, I think the time for them to be recognised and re-rated, could be coming soon as well.
Okay, and our last question for today: when do you expect to pay dividends to your shareholders?
We as people would know, we don't have a dividend policy as such, but we won't be in a. If you look at what we've got there, we may get bumper stuff that occurs, but if you look forwards, the cash flow would see FY26 as being the first position where that would be possible, but we haven't discussed that at the board yet. So people should be continuing to work on the basis that we're not paying a dividend and that it's, share price appreciation that we're looking at to return money to shareholders. But the first time we would discuss that as a board would probably be FY26, unless something amazing happens in the gold price.
Thanks, Nic. That does appear to cover the majority of questions from our audience today. If you do have any further questions for Nic, please feel free to forward them to info@corporatestorytime.com. Nic, do you have any final comments?
No, not at all, apart from to say, look, thanks people for your attention. I hope that this has given a lot of clarity about what we're doing and where we're going, and people can see that, if you just do the simple maths, right? If you just do the simple maths and you look at forward gold, look at the costs that we have, and you subtract away the capital, and even if you take into account all the hedging and puts and everything we had, we're expecting to release $500 million free cash flow over the next 5 years. So, we look forward to delivering on that for people.
Thank you so much, Nic, and to your team for the comprehensive update today. This does conclude our webinar, and I thank you all for your time.
Thanks.